Hello, everybody. Welcome to Talk About Houses. I'm Todd.
I'm Juana.
Okay, so today we're going to talk about a report that came out from Case-Shiller. Home prices declines may be over, S&P Case-Shiller says. Okay, we just did a video, I think it was yesterday, where another set of information came out that said March over year in the U.S., real estate was down 0.9%. That's the housing crash, 0.9%. It's down 0.9%.
Right.
Okay. Case-Shiller, though, they have a different methodology, and we're going to talk about that methodology. But it is possible for two different companies to, basically have different data or different ways that they parse the data, right?
Oh, so this confuses me, and I think confuses everybody out there.
Right.
The data is the data, right? So, then they're interpreting the data different. They're manipulating the data different. I mean. Okay,
I'll give you an example.
Okay.
We'll take two scenarios, and I'll make them very simple. Okay. We're going to just go with a neighborhood. Okay. You have one neighborhood, and in that neighborhood, you have 5 home sales. Okay. 300, 310, 320, 330, 340. So 320 is the median home price. It's 320. Okay. They say 320 is the median home price. Now, the next year in that same neighborhood, you have 4 sales. You don't have 5, you have 4. It's actually the exact same homes, right? 4 of the exact same homes sell. The 300 home doesn't sell. The 310 sells for 310 again. The 320, 330, 340. The median now is the average between 320 and 330. So 325. So they're going to say median home prices are 325 because you pick the median number. But when you have an even number, the median becomes the middle number, right? Okay. Now, so that's what people would say is the median home values went up $5,000, even though the exact same 4 houses sold for the exact same amount, right? Now, another company would index. So what they would do is they would look at individual houses, and then they would determine each one individually how much they went up or went down. And then they would create an index that they would average that index and get the data. And the reason why they would do that is because if you have, for some reason nationally, more lower end home selling, that would make home prices appear to be falling because the median would drop, right? And we've seen that here in Vegas, where Lake Las Vegas had that, where when 2005, when home prices were going up, Lake Las Vegas, median home prices were down 30%. People couldn't figure it out. But it was because they opened up tract housing in there. So the median home wasn't, $1 million anymore. It was like, $750,000 or whatever. Okay. So that's what Case-Shiller does. Case-Shiller has an index that says nationally home prices in March were 0.7% higher than March 2022. S&P CoreLogic Case-Shiller indices said, so one's using median prices. They're just being super easy. Let's just pick the middle home in the country. So you take all the homes that sold, all couple million or whatever, right? And then they just pick the middle one. Guys, I'm not kidding you. That's what median homes is. That's how they're doing this. They just line up all the homes and they take the top one off and the bottom one off and they go all the way to the middle. Every market does it. They do it for the whole country. That's how they do it. That's the median. You're probably saying, yeah, but there's so many houses statistically. Yeah, but remember, if there's pressure to buy bigger homes or pressure to buy smaller homes nationally, people tend to buy bigger, smaller homes. It's going to push that, number higher or lower. Especially, what if it's a big year for home builders? In a big year for home builder, home prices go up. Why do home prices go up in a big year for home builders?
Because home builders are building bigger homes, which are more expensive homes.
Yeah, home builders are out there building $200,000 starter homes. They're building, $600,000, $700,000, $800,000. Like, they tend to build higher, more expensive homes.
Yep.
Right. So, and if those are being averaged in, that can affect. So that's why sometimes these numbers don't add up. The other thing is, what if they went by price per square foot? So what if they looked at the price per square foot of every home? And that's another way to measure, because that's telling you what homes are selling for per square foot. That also meters out more expensive homes, cheaper homes, and the whole thing. So that's why S&P said, no. They didn't go down 9%, 0.9%. That 0.9% was the median. What they're saying is, based on our indices, home prices went up a little bit. It's just the median went down because, less people bought higher end homes last year.
I think there's truth in that.
Okay.
I do. I think less higher end homes transacted. So I agree with that.
Okay. Here's the next quote. After seasonal adjustment, prices increased nationally 0.4% in March compared with February. The 10-city composite gained 0.6%. The 20-city composite rose 0.5%. So what they did is they've even broken down every city, the top 10 and top 20 cities in the U.S., and then how much they appreciated in value indexed to the previous year. Mm-hmm. That's another interesting thing. Home prices are rising again month to month, however, after seasonal adjustments, which in seasonal adjustments is like, you can't compare home state, because this is what everybody did, that all the housing haters and crash bros. Todd, but in May of last year, and then they compare it to October. Like every single year, there has never, ever been in October hotter than a May of the same year. Mm-hmm. Maybe 2020. It might have been the only time it ever happened. But I'm just saying that if you're saying, oh, home prices are going to drop or there's going to be less sales in the fall. Yeah, there are every year. So that's why they have to, adjust these seasonally for the time of year, right? So
I think 2020 was the year because we were all locked up in the spring.
We were kind of locked up in the spring. Mm-hmm. Okay, home prices are rising again month to month. We already talked about that. Okay. Lazara also noted that the price acceleration nationally was also apparent at a more granular level. Before seasonal adjustment, prices rose in all 20 cities in March versus only 12 of the top 20 cities in February. And in all 20, price gains accelerated between February and March. So in every city, the amount of price appreciation increased in March versus February. So this is just kind of interesting that Case-Shiller is sort of giving us more geeky information. Mm-hmm. Because, think about this. A lot of people are on this blog. We got people that put a comment in the other day that said they're in Georgia. Mm-hmm. So these videos usually come out at 7 a.m. Pacific time, but they're out there in Georgia. It's like 10 a.m. Mm-hmm. So they're spooling up, boom, hitting play and watching the video. But what happens in Georgia is different than what happens in California, than what happens in New York, than what happens in Texas.
Right. Yeah, we've talked about this a lot. Real estate markets are hyper-local, so even more than that, even adjacent streets have different values. So certainly greater geographic areas are going to have a lot more fluctuation.
Okay. The bottom line is the reason why we did this article, why we talked about it, is because I don't think that it's a self-serving article that they're trying to say home prices went up year over year, because certainly there were some cities where home prices didn't go up. Mm-hmm. There were some cities where they went up substantially, mm-hmm. probably Miami and certain Florida markets. California probably didn't do great. Most of the West didn't do fantastic. The South probably did very well.
There were places in the Northeast that did really well.
There were places in the Northeast that went well year over year, but then they got remember, they lagged everybody in mm-hmm. 2020 and 21 because that's where a lot of people were leaving. Mm-hmm. So maybe you just had people go back because that's what happened in New York City. Matter of fact, New York City, that's the big thing, is home prices went up in New York City. That was a surprise. I'll put a link to the article, but in the article it specifically mentioned like San Francisco and New York mm-hmm. City, and talking about how they surprisingly were rebounding. But remember, they're rebounding off of artificial lows because a lot of people jammed. Mm-hmm. San Francisco has to get its act together. New York, I think, already did. I think New Yorkers are a lot less tolerant of craziness, and they allowed a little craziness, but then they finally said, you know what, we're taking back the city. San Francisco hadn't done that yet. I think once San Francisco takes back the city, that place becomes boomtown again.
I agree. San Francisco is a beautiful city. It's a small city. It's a very compact city.
Yeah.
So it requires good governance. I mean, every place requires good governance, but particularly a place that is very densely populated, it's very compact, you have to have good governance.
Right. So that was sort of the whole idea of doing the video was just, they said home prices went up like 0.7%. Mm-hmm. The other one said they went down. Median home prices went down 0.9, but you would, in theory, have to look at every single house. And then you'd have to also take out if they flipped it, if they fixed it up, right? Mm-hmm. That's another problem. Let's talk about this because that's kind of interesting thing. Let's say you take a house and you buy it for $300,000, mm-hmm. and then say it's the house next door to you, mm-hmm. and you're a third-party observer. All you see is house sells for $300,000, and then the next week or month or two, whatever later, you find out that it sells, and you're like, oh wow, they sold it, and you find out it sold for $350,000. Mm-hmm. Now, do you go and tell your significant other, our home value just went up $50,000? Because the house next door, it was worth $300,000, now it's worth $350,000, so we've got to be worth $50,000 more too, right?
So honestly, most people do. Most
people do because they're
optimistic.
That's I wasn't going to use that word.
Okay, delusional?
It starts with a D.
Somewhere in between, huh? So yes, most people do. But remember, this is all kind of funny money. The only time that you really care what it is when you buy it and when you sell it.
Right.
So, and of course, people always think that their their 1960s linoleum is so much better than the travertine floor.
I actually had somebody tell me that.
I know.
That their linoleum floor was so much nicer than that nasty 18-inch travertine in the house next door that looks really cold and ugly. And their linoleum looked really warm and inviting. And I was thinking, oh, okay, that's interesting.
Well, everybody has opinions. But the point is that everybody does fantasize that their house is worth more. Sometimes it is and sometimes it isn't. Homes that have been renovated are usually worth more money for a lot of reasons. One of them is because they are usually more updated, they're usually more upgraded, and buyers would rather have something that is newer or newish rather than dated.
Right. So,
but I like Case-Shiller honestly more than I like Fortune or some of the other.
The NAR data, basically, I'll use NAR data. All NAR does is they just give the median.
Well,
they just give the median for the whole nation.
Right. So I don't mind the NAR data. I just like Case-Shiller because I think they're more detailed.
Okay. I agree.
So anyway, what do you think? Whose data do you like better, NAR or Case-Shiller? What do you think about Todd's eloquent explanation at the beginning of the video about how you can take the same, essentially the same data and come up with a different conclusion, or at least seemingly different conclusion? Let us know in the comments. We want to know what you think. Please leave us comments. Please be nice to each other in the comments. We appreciate that. We want to make it a nice place for everybody to have a conversation. Please subscribe, hit the notification bell, like the video, share the video, and we'll see you on the next video. Bye.
Bye.